Sir, it was in MIT.
At MIT, and what was the thing that was transacted?
I guess it was marijuana.
Yes, I think it was 1972 or 1975. It was a transaction of marijuana, which of course is definitely illegal and we strongly discourage. But yeah, so that was the first transaction that happened on the internet, e-commerce transaction that happened on the internet. And like formally, I think it was in 1994 or 95. The Pizza Hut, they came up with a website, pizza.net something. So a pizza was officially sold on the internet. That was more of an official transaction that happened. But yeah. Anyways, Rohit, please carry on. Yeah.
Yes, so very good interruption, a very good piece of snippets that you have given, Abhishek, and please feel free to join and add as we go on this presentation. So it's interesting. See, you talked about e-commerce. E-commerce as a technology and the potential was available in 1975. But we did not see Amazon until 1996. Why? The question is why, if people knew it 20 years before that e-commerce is going to be big, why didn't we get e-commerce earlier? People knew in 1971 that email is going to be big. But we did not get Hotmail until late 1990s. People knew search engine is going to be big, but we did not get Google until 1999. So that's the whole way the world goes, that even if the technology is available, it takes an adoption cycle. And the two factors which is responsible for the adoption cycle, the first is the technology has to be easy enough. And until browsers came, the technology of internet was simply not easy enough. Only the nerds and computer scientists and university researchers, they had the ability to access internet. And the same is the case with browsers, with blockchain today. Blockchain is just too difficult, and that's one of the problems that RanchiMall is effectively is trying very hard to solve. That is our core focus, to make blockchain as a technology very, very easy for everyone to work on. So blockchain story will be no different. It will take its time before it gets adoption. But just because blockchain today is not popular, it does not mean it is any less revolutionary like internet itself. And I'm as Abhishek was saying, I'm a technology guy and I like to experiment. So I've experimented with a lot of things. I've experimented with AI. I've experimented with 3D printing. I've experimented. I've interacted with people in IoT space. But I made up my mind that I'm going to dedicate myself to blockchain, and that happened by 2016. When I was exploring all these technologies, is because I realized that blockchain is internet to the power of 100. That's the impact that's going to make. So what internet did? Why internet was so impactful? Internet was impactful because it connected people with newer sources of information. And blockchain is equally impactful because it connects people with newer sources of collaboration. Currently, at this point of time, if you look at your collaborative, your collaborative opportunities are very, very limited. You can collaborate only with companies. You can collaborate with government. Suppose you pass out from IIM Jammu. Your opportunities are very few. Either you would go and pick up a job with a large company, or you would do higher research and higher education in US, or you would do a PhD somewhere. So as a graduate of IIM Jammu, your collaboration opportunities to further your career is either government, is a university, or a private sector company. That's it. Can you collaborate with automatically and through a very easy system, through a fellow student somewhere in US, in such a way that it can give you an earning and living? The answer is no. It's very difficult at this point of time. But when blockchain comes, and then blockchain is all pervasive, then all you need to do is to take a blockchain ID, find out an area of your collaborative interest, put your hat into that ring, jump into it, and not only are you earning, but you're also finding professional fulfillment. You're doing things that you really want to do. That's the fundamental opportunity and the fundamental value proposition for blockchain. So I'm going to talk about two forms of collaboration. One is, how do you decentralize investors? And second, how do you decentralize customers? So the way I'm going to structure it, I'm going to first give you a very small snippet, a very small briefing on both of these aspects, because RanchiMall has done that. In my previous company, we needed to have either a large investor or a large customer. In RanchiMall, our investors are decentralized. We did what is in 2017, we did what is called as an initial coin offer. And we got investment from not large people, but our friends only. Very few, maybe 100, 150 friends. They invest more. Doing, and they participated. So that's all it took. So this entire form of methodology called ICO, it essentially decentralized investing. But the real power came when we also realized that we don't. Before this, I was in a company called Ernst & Young, which is a consulting firm. And then I was in my own 2 or 3 years ahead of its time today. But that's where we are getting into. And that's what we are also working into.
I have a follow-up question to this. So do I have to create my own blockchain for this, or already there exists a platform which I can be like a subchain of that platform, which will be like having main fund or tokenization of
you don't have to create blockchain. Okay, blockchains are already there. You have to use the blockchain to create your rules of engagement and collaboration. So we are not created, even RanchiMall has not created its own blockchain. We are using an existing blockchain, which is called the Flow blockchain, for which we have got your ID generated. Because blockchain creation is the job of specialist.
Okay.
So you have to think that now that the blockchain exists in this world, what can I do? And then you start using the blockchain. You start finding out one of those blockchains and you start using one of those blockchains. Now, currently one of the blockchains which is being used for smart contracts is Ethereum. But I'm not very hopeful about that blockchain, because Ethereum blockchain has a technology problem. It uses something called MetaMask. And that MetaMask is too complicated for ordinary people. Your mom and dad cannot use MetaMask. But your mom and dad, they can use internet. So we still have a little bit of technology adoption problem in Ethereum. So I don't think Ethereum will go too far. And that's why we are also making an attempt. We are latching into another blockchain, which is far more easier for other people to use.
Okay, sir.
So I will also explain you will get the idea more, you have to go slightly more deeper. The idea is too radical for you to absorb. But just trust me, that blockchain world, all you have to do is to do consumption. Okay?
Yes, sir. Yes, sir. Okay.
All right. Any more questions? Get to here? So I'll correct myself that this offer is available to IIM Jammu, and that was a slippage of mine because I was interacting with Abhishek so much for IIM Ranchi, so slippage of my tongue. So so I'll be more than welcome if students from IIM Jammu participate in our. We have 2 blockchain contracts. One is an internship blockchain contract, and second is startup blockchain contract. And we'll be more than happy in having a student participate in either or.
Yes, sir. We'll love to mention. We love to work with, learn about more about blockchains and get some practical hands-on knowledge on that.
Awesome, awesome. So once we are done with this session and we are already in a group, we'll start interacting. Okay, we already in a WhatsApp group. We'll start interacting straight away there. Okay.
Yes, sir.
All right. So yeah, so we will be in touch. Definitely will be in touch. I'll be more than happy and more than it'll be exciting because see, in any new technology, it only comes from young people. I can't go. There's no other age group I can go and because no one understands these technologies. So it's only the young people like you who would understand these technology and who would create some new and brilliant ideas out of it. So I would definitely love if students from IIM Jammu take the initiative. That's also a kind of people I also look forward for. Okay. Okay. Why is my screen? All right. Okay. So what I'm going to do is I'm going to come back to this section at the end of my talk. Okay. The decentralizing investment and decentralizing, and I'm going to explain how RanchiMall did that. But before that, I want to talk to you about some other financial applications. Okay. And remember, blockchain is just not about financial application. You can also do a new form of Google. You can do a new form of Facebook. But I would like to take you through some financial application and so that you can realize how awesome blockchain is. So I'm going to talk to you about a new how blockchain is changing the financial world. Now, has anyone in your group has heard of a term called DeFi? D-E-F-I, DeFi. Has anyone heard about it? So what DeFi? DeFi stands for distributed finance. And it's one of the hottest areas today in blockchain. And why is it one of the hottest area? Is if you want to go to a bank as a customer and you ask what's the rate of interest. The rate of interest is very, very low in all Indian banks, but just not Indian banks, but also all the banks all over the world. The rate of interest rates are almost at the rock bottom. In some countries, it's almost negative, which is you get paid to take loans. It has happened in Switzerland, it has happened in Japan. And in blockchain, we can do what is called as continuous compounding of interest rate. That means there's a counter, and the counter starts immediately. And suppose you have put your money for 5 hours into a blockchain bank. You will be paid interest only for 5 hours. And that's not a possibility. That cannot be done with current day banking system. We can create very efficient loan markets with amazing risk management with blockchains. So today, it's very easy for someone to default in any banking system. And the default rate is very, very high. People take a lot of money and they simply default, and banks cannot do anything because the asset itself has depreciated so much that it's impossible to recover the money that the banks invested or banks loaned. In blockchain, we can totally eliminate it. Or what we could say that if you want loan from blockchain system, you first put a collateral. And you have to put a collateral which the blockchain can understand. And you can take loan only up to 20 or 25% of that collateral, not more than that. And when you take that loan up to 20 and 25%, if you default, your collateral is automatically adjusted. It's automatically liquidated. So it's absolutely default rate. The default rate is zero in blockchain banks. And there are blockchain banks. If you search internet, there are banks. I will write on your WhatsApp group. I'll write some terms. Okay. So one is Compound. You can go and search later. Other is dy by dx. I'm writing on in the Google group. The third is Aave. These are blockchain banks with zero possibility of default, continuous compounding rate of interest, and both the lender and the borrower, they can come in anytime and withdraw anytime without doing a single piece of documentation. How efficient is that? How powerful is that? It's a very powerful concept. And the banks of the present don't get in the way. Is how much innovation which is happening in the bank world. We can create a blockchain event-based insurance products. So we have in blockchain, we have a concept called oracles. We can create oracles which will give a data that there is a cyclone or there is a tsunami somewhere. And that data cannot be tampered with because it's been verified by 100 different people. You cannot tamper with oracle data. And then everyone who has a certified house in the zone of disaster, he gets the insurance payments automatically from the blockchain. So blockchain is a revolution in insurance also. I talked about Oracle. We could have a trusted Oracle based off blockchain event insurance product. Oracle is a very powerful concept that allows you to marry the real world with the blockchain world. In fact, there's a company in blockchain world. The name is Chainlink. Chainlink went on from $150 million valuation to about $5 billion valuation, just on the concept. Okay, they have not done it totally yet. Okay, but there's just a theoretical concept that they will provide Oracle data to the blockchain, to the Ethereum blockchain. So I'll write that also into the WhatsApp group so that you can research on it. It's called Chainlink. Okay, when you get time, just look at it. Chainlink. Now another revolution which has come. See, these are the new ideas that the blockchain world is bringing just in the financial world. Okay? And these are the ideas that have happened, that is real today. Now, when you go to a market, a stock market, you need to find a buyer and a seller. Okay, without a buyer and a seller, a stock trade cannot happen in an exchange, a stock exchange. But these DeFi concepts, they have totally replaced counterparties. They have totally replaced counterparties, which means that you are a buyer, but you don't need a seller. And they have an idea called a liquidity pool. So they use a concept called liquidity pool. So there's no seller. You can simply go as a buyer and you are guaranteed to be able to buy or sell your stuff because there are liquidity pools. But that's an amazing innovation. It just mind blows me the kind of innovation which is going on in the blockchain world, which is the way they're replacing the modern day banks and they're replacing the modern day insurance companies. And I just can't even imagine the current day large banks, they don't even have a clue what's going on there. It's kind of scary. You can also create assets on the blockchain whose value mirrors the value of conventional assets like company stocks and national currencies. So today, we have something called stable coins, called the US dollar stable coin, or that's the most popular stable coin. RanchiMall is also, we cannot, because of the legal reasons, we can't do a stable coin because Reserve Bank of India has been a little bit, it's a Uniswap. Okay, let me write that. Let me write it in the Google. Okay, okay, and just go and Google search about Uniswap for liquidity pools. You'll understand how it works. Uniswap liquidity pool. You'll know how the whole thing works. Okay, it's a very powerful idea.
Okay, sir. Yeah, I'll search about it.
Okay. You just search about it. Okay, and you'll get more details. Because you have to think about it. They are. Yeah.
I think we are reaching the time limit now.
Okay, so I think I don't have too much. I'll just. So there are interest rate models for blockchain-based bank, and in a blockchain-based bank, the interest rates are based there's the interest rate model as to what interest rate they offer, and it basically depends on the how much money of asset which is to be lent is utilized. Okay, so if you have 90% utilization, then your rate of interest will be higher for both borrowers and lenders. And if, let's say, an asset which is being lent is only 10% utilized, your rate of interest is very, very low. So they have this called interest rate models. Again, it's a very, very important. It's a very, very powerful concept out there. And in this case, the blockchain-based banks, they are again a very, very big innovation, which is currently the interest rate is set by central banks and is arbitrary. But here it is very, very clear. If the utilization is high, the interest rate is high. If the utilization is low, the interest rate is low. Very, very powerful concept. And whatever the difference, suppose a blockchain-based bank, it gives a rate of interest. Okay, there's a difference between, obviously, the lenders will pay the people who lend, okay, and people who borrow. Borrowers pay more and lenders get out less. So there's a difference, which is called the banking margin, and that difference goes to the owners of the blockchain, ownership token. That's how the valuation of the blockchain system goes. So we have a blockchain bank initiative also. We are creating also a bank, as well, and we think that our bank, because our technology is so simple, it will be bigger than Ethereum-based banks. And our strategy is in the banking is we would be very careful in picking the collaterals, okay? And we would like people to be locked into collaterals for 3 to 4 years, and these are long-term assets. So the most of the gains of the people will come because we lock them into some of the best collaterals that we researched. So that's our strategy in the banking, that we would want to come up with such collaterals like Google stock, or Facebook stock, which we know will keep on increasing in price over a period of time. Bitcoin is another collateral. We believe Bitcoin will go up in price over a period of time. But they take some time. It takes 3 or 4 or 5 years to get there. So we would like people to be locked for 4 or 5 years, have some very high collaterals, and people are not making money on what they borrow and what they lend. They're making money on collaterals. That's our strategy for the bank. So we talked about. I'm going to share this presentation with you. What we're talking about here is that in any system that is going to go high, you cannot offer it to everyone. You have to limit. Like in Bitcoin bonds, I had to limit. My limit was the amount of capital that I myself had, so that I can ensure that no one loses money. So you cannot offer such thing to everyone. If you get a great idea, it has to be limited. Only then there is price appreciation possible. Otherwise, you won't get. Essentially, in a blockchain banking scenario, what we are learning is that they cannot be universal. It has to be given to the best quality people, best quality borrowers, and best quality lenders. But that's a very good system, because that ensures that people who get in, everyone is they're all adding value to each other, and no one the system is not being cheated, which is not the present day case. In present day case, banks default. People get loans and loans are never repaid, and those scenarios are not possible in blockchain scenario. Okay. Now there's another initiative which is called the price stabilization mechanism. This is a third initiative which is pretty complicated at this point of time. But what I'll tell you about this is another innovation, this innovation is about arbitrage, usage of arbitrage. And this is again another innovation, that people can use arbitrage, like the rate of difference between a blockchain price and an open market price, and they use arbitrage, and they use arbitrage as a very powerful tool to stabilize prices. And again, a massive initiative, a massive innovation from the blockchain world. So in summary, these are the 3 big innovations, okay, in financial world from the blockchain. The first is the usage of liquidity pool to eliminate counterparty in trading of assets. Second is automatic borrowing and lending. Automatic borrowing and lending without, everything is automatic on the blockchain rules, on the basis of utilization rates. And third is arbitrage as a tool to stabilize prices. Okay, and any DeFi initiative will take, any blockchain DeFi, any blockchain back, any financial institution that will take, all those